if you have been noticing the trend recently from the AI community, we have been talking about how we can do deep reasoning so it can get better results. Like experts call it inference scaling law. So what we do is like we have a model to determine whether it's something that we can answer quickly by something we can check on the facts quickly, or something that actually requires some analysis so that it would take like 5, 10, or even 20 questions to find all the puzzles in order to answer it correctly. Just like analysts, if you ask that like how's the weather today, it can check for you very easily. If you're asking me what's the NVIDIA stock price coming up, then probably I would also need a minute or two. I probably can't. I need like 10 minutes or like 30 minutes to answer you. But AI would now usually take around 1 minute to at most 2 minutes to answer you that deep question.
Okay, fair enough. So, Cheney, look, I know you back-tested how your app is going to perform, right, by creating a model portfolio. And at the end of the day, it generated a 41.75% return compared to benchmark, which is about 33% or so. What was that benchmark? It sounds like it was the NASDAQ.
Yes. So it's a benchmark which composes of the top 100 U.S. Listed companies. So you know that just like the Magnificent Seven is like composing almost like 30% up for the market already. So what's meaningful here is that we are asking each of the stock in the benchmark once a week, and we have a prompt something like give me a recommendation on NVIDIA whether I should buy /hold/sell on a 1-year investment horizon. So I ask each of the stock in the benchmark once a week. And I will be adjusting the portfolio up if the AI says I should buy, and I will adjust it down, underweight it if the AI says I should sell. By just adjusting it once a week, and I just ask the AI, should I buy or not, given your analysis, it outperforms the benchmark by 7.5%. We all know that, like, yes, the market has been up a lot, but it has been up 7% further from the benchmark, means there's really something from the AI. The AI is really alpha generating. I think it's the ChatGPT moment in an AI for investment tool like this.
Chen, you got to ask you, and I think this is more than a fair question, and probably even more relevant because this app is meant for investors and it has to do with other people's money, right? I mean, apps like yours in the past, okay, have been wrong or misleading or have generated what are known as, I guess, hallucinations. How are you making sure that your app doesn't do that?
Sure. Hallucination refers to the model when it has no internal answer, but it tries to answer you something meaningful. It would try to make things up. But our model is different. We refer the model's capability in reasoning, but not its internal knowledge. Every question, we have to search the database for the right answer, compare it, and show the summary of what we search. So that's why we can't hallucinate anything based on the internal model knowledge. We also have a separate engine, a separate AI model to check on whether our answer is really coming from the sources we refer, and users can always break down the sub-questions we ask and check for the references. So it would be like everything will have a reference and it's all cited.